Hello and welcome to a financial news sweep for January. What's going on in the world of business? And how can it affect our stock market portfolios? Let's take a look. Let's start off in South America. The Savior of Argentina? Argentinians have become accustomed to soaring inflation and have seen the peso being devalued by 95% against the US dollar in the last 5 years. After years of mismanagement, with semi-corrupt officials spending much more than what is being collected in taxes and running large trade deficits, the disastrous situation has paved way for the new and colorful president of Argentina, Javier Milei, who took office in early December. After only a little more than a month in office, the libertarian leader has set a great deal of things in motion, as there are, in his words, no alternatives to shock treatment. After going on a spree with a long list of reforms and firing about 5,000 government officials, he now also stopped Argentina's plans to join the trade alliance of BRICS, which was scheduled for the 1st of January this year. He says that he is a defender of democracy and freedom, and he wants Argentina to be the moral lighthouse of his continent, and that he will not do business with any communists. He explicitly goes on to state that neither China nor Russia fits the template. Instead, Milei seeks to get closer to the West.
Free trade capitalism as an economic system is the only instrument we have to end hunger, poverty, and extreme poverty across our planet.
Argentina was one of the richest countries in the world 100 years ago. It then went on a socialistic detour and ended up where it is now. Milei likes to compare his country's socialistic collectivism with a frog in water. If someone starts to heat it up, the frog won't notice until it is too late and it dies. Will Mr. Milei change the course of the nation so that maybe in a few years we'll add some Argentinian companies to our stock market portfolios? I don't know. Either way, we are currently watching a large-scale experiment in real time, and macroeconomics can hardly be more exciting than this. If you want me to update you on how things progress and how Argentina reacts to Milei's shock treatment, hit the thumbs up button. Lost door, lost value. In mid-January, a group of passengers in Portland, Oregon, were taken by surprise as their Boeing 737 MAX suddenly lost one of their doors soon after takeoff. At a height of 5,000 meters or 16,000 feet, the low pressure forced a bunch of phones and other stuff out the door. Luckily, no one was seated next to the ripped-out door, and no one got seriously injured. Physically, that is. Because the event made Boeing's share price drop by almost 10% and lost the shareholders roughly $13 billion in value. Bank of America said shortly thereafter that the incident does not alter its buy recommendation for Boeing stock. Analysts from the same firm continued by stating that we do not expect this current issue to have a material impact on our 2024 financial forecast. Boeing can't be very happy with their 737 MAX model. This is the same one that was grounded worldwide from 2019 to 2021, following crashes in Ethiopia and Indonesia, where a total of 346 people were killed. While I don't have a strong opinion on the stock, I can't help but think that a manufacturer's safety reputation is a must-have. For every incident, travelers become increasingly aware of the plane's manufacturer. And if travelers become aware, then airlines will have to adopt by purchasing fewer Boeings and, say, more Airbuses. In the tight race between Boeing and Airbus, Boeing can't afford to slip on quality and safety. However, there doesn't really seem to be a difference in safety between the two companies' planes. But it is not necessarily the actual safety that matters. What matters is the traveler's perception of the safety. And currently, Airbus is beating Boeing. Before we hear about how the SEC helps boost the valuation of Bitcoin, let's hear it from today's sponsor, which happens to be me. For a decade now, I've been successfully investing my money in the stock market, and I have managed to continuously beat the index. That top graph is me, by the way. Many of you have been interested in knowing exactly how I go on about picking my stocks and how I run my portfolio. I figured that instead of telling you, I could show you. So, as of recently, there is now a Patreon where you can join me and a lot of others like yourself in a practical, case-by-case and more private setting. So, for exclusive content and my full portfolio, head over to the Patreon page. See you there. Now, where were we? Ah yes, how the SEC boosts the price of Bitcoin. To the moon? Last year, Bitcoin more than doubled in value. According to Reuters, this was partly due to the fact that the SEC was expected to approve spot Bitcoin ETFs. What's that? And how does it differ from the previous futures Bitcoin ETFs? The main difference between a futures Bitcoin ETF and the spot Bitcoin ETF is that the spot ETF actually owns the underlying asset, in this case Bitcoin, while the futures ETF uses derivatives to mimic Bitcoin's price. Clearly, a spot ETF is less opaque and might therefore achieve greater acceptance in the investing community. In mid-January, 11 of these spot Bitcoin ETFs were approved, just as the market had anticipated. And the record-breaking 4.5 billion worth of trading volume on the very first day demonstrates how longed for these spot ETFs were. Apparently, the first to file for such an ETF were the Winklevoss twins. This was back in 2013, when the price per Bitcoin was roughly $100. Today's price is roughly $40,000. You remember the Winklevoss, right? The twin brothers who claimed Zuckerberg stole the idea of Facebook from them and went on to settle for $65 million. Since then, the gradual acceptance of Bitcoin as a part of our financial system has made its value skyrocket and grown Winklevoss's fortune to a great extent. And with the SEC having approved the spot Bitcoin ETFs, the normalization of Bitcoin continues by lowering the hurdles and simplifying access to the asset class. BYD stole the crown. Have you heard of BYD, short for Build Your Dreams? Well, it is now the king of electric vehicles. Together, Tesla and BYD hold roughly 35% of the global electric vehicle market. Until now, Tesla has managed to stay ahead of BYD, but no more. Although a majority of BYD's cars are sold in China, the market share in Western countries is increasing rapidly, although from a lower base, and they are not yet sold in the US due to the tension between Washington and Beijing. BYD started out in the battery industry, making rechargeables for phones and other gadgets. It wasn't until the early 2000s that they got engaged in the auto industry. As BYD still makes the batteries and many other car parts in-house, it got a big leg up on competition in last year's supply chain shortages. You know who happens to profit from BYD's growth? Warren Buffett and Berkshire Hathaway. Mr. Munger was one of the early advocates of BYD.
I don't want to bet against 17,000 Chinese engineers led by Wan Chuanfu, plus 100,000 more talented Chinese in a brand new area constructed the way they want it. And I will be amazed if great things don't happen here.
And in 2008, Berkshire bought roughly 10% of the company at $1 per share. Now, some 15 years later, the shares trade at almost 30 times that. Being vertically integrated and a low-cost producer surely has its advantages. Perhaps Elon has met his equal in BYD's founder, Wang Chuanfu. Pirates of the Canal. Pirates of the Canal. As it seemed most of the developed world finally got a grip on inflation, it's a bit worrisome to see the Iran-backed Houthis from Yemen causing a major decline in trade in the Suez Canal. Why does this matter, and how is it connected to consumer prices and inflation? A staggering 20% of world trade relies on the Red Sea and the Suez Canal for passage. Yet, the Houthis' disruptive tactics in the Bab al-Mandab Strait, worryingly named the Gate of Tears, have led to a 30% decrease in ship traffic. The Houthis' actions include launching anti-ship ballistic missiles and daring attempts at hijacking vessels.
Sure. I'm the captain now.
So, why not take an alternative route and avoid the troublesome strait altogether? Unfortunately, that means navigating around the Cape of Good Hope in South Africa, which adds some 10 days to the journey. The fragility of global trade was demonstrated in 2021, when the Ever Given blocked the Suez Canal for 6 days, causing widespread logistical delays. This new escalating situation raises concerns about a potential surge in prices for shipped goods. Drawing parallels to the Ever Given incident, the impact on prices could be significant. A US-led multinational force was deployed in the region in December to safeguard trade routes. Their mission is to neutralize threats, intercept incoming missiles, and ensure the safe passage of ships. We wish them the best of luck. Can't wait to see what February has in store for us. Cheers!